Trades. If you have not like and subscribe, don't forget to like and subscribe. Today I'm going to talk about one of the strategy I use when I'm long on some stocks. So if you are long on AMC and GME, it's a great opportunity. You can literally grab some free money. So I'm going to show you exactly how to do that and what I'm talking about. So the strategy works if you are long in options. So basically, you have a leaps or even like 4 or 5 months out options on AMC or GME. Or this strategy will also work if you have, let's say, shares, like at least it has to be in 100 shares or more, multiple of 100 shares. So basically, this is an option strategy, and because of the IV, the volatility is really high on AMC and GME, we can literally leverage a lot of free money by using that strategy. So let's kind of look into the chart, right? If you look at the AMC, really made that spiral really tight flag, and it went on the downside. The whole market kind of deep dive on us last week. So it's kind of finding that support around this 25 27 area and kind of bounce back. So let's see how that goes, and it may kind of go to the top channel as well. But this will work for both AMC, GME, or any other stocks, but it will really work good if it has a high volatility. Same thing, let's look at the GME. So we'll go to the chart, then we'll just talk about the strategy. Same thing, actually GME is also making the same really tight range. If you look at this, right? Yep. Really tight range. It's kind of bouncing from here. So let's see if it goes and kind of test, or maybe it break on the upside at the time. So I'm not really predicting which side we go, but definitely there's a lot of momentum going on, and we just go down. And also if you look at that, it's kind of support right around like 50-60 area, and it just bounced back. It hit like 200 something. Yesterday we had pretty good day, $10 up. Seems like pre-market pretty flat, but we'll know, right? So really tight actions probably bust, but we are really, if you are long, right, it doesn't matter why you are, but if you are long, you can leverage this. And now let's talk about the strategy. So I'm in the AMC, right? AMC right now is 31 bucks. So I'm kind of actually using the same strategy right here. So I have a call, AMC $1 call, which I paid around uh, 3,000 or something, right? A little bit up, but I think I paid around 3,000, so a little bit up. Actually I got it yesterday itself, and I thought like the volatility, right, really high. So you are long basically means you buy a one calls, or you can have 10 or 20 100 or whatever, right? Now what I'm doing is this call expired on 23rd. So what I'm doing is you can keep this call as a collateral and sell calls on top of it. You don't need to own any stocks or anything. Or the strategy work if you own 100 stock of AMC, or multiple of 100, like 500 you can do 5 times. If you have 1,000 you can sell 10 calls. Basically 100 shares basically means one option contract. So now what you can do is, if you have, you can sell options. So if you go to, like, you got to look into like which option has really high IV and high volume. But what I did was January 2020, right? And if you really believe you are long, but you don't believe it's gonna go, I mean, it can go above that too, that's fine too. But if you really don't believe it's gonna go any higher than 140 within January, which is almost a month, right? Today is 9 or 10 December, so almost a month. You can rag good 40 bucks for doing that. See, I sold 140 calls, I racked $40, right? So a lot of times if you have 2 or 3 years leaps using this strategy, you can literally make your leap free. Here it's basically, I think it's a free money. So uh, by January, even if AMC is 100 bucks, this expire worthless. You collected 40 bucks. On top of that, your option value appreciates in value. If it goes to 100, probably it's like 30, so probably around 7,000 or something, right? 10,000, something like that. So you will make money in the option, uh, in your like long, and also you will make on your short option. So basically you can sell, right, and I can keep repeating this. Once it's expired in January, I can do this for February or March or whatever I like. Or you can even do weekly, right? So weekly, if you do 140, probably won't pay much. We can see that if I do, this is January still, but if I go, December 17, like a week. So if you go here, but you can even do, right, for these two, even 70 pays 10, 13 bucks. That's pretty good deal. um, as long as stock doesn't go to 70, you're making 13 bucks. And think about it, you have 100 of stocks and you're making 40 bucks. I mean, if you have, like, let's say 100 contract, and if you are making like 40 bucks, that's like 4,000, right? 4,000 in a month. I will take it. Same thing with the GME. Look at GME, right? GME, it's even absurd. The IV is so high. I don't have any GME, but if you look at, like, if you have a leaps, right? If you have a leap or even 100 stocks, right, of GME, if you look at, let's say, I was actually looking, like, let's say you have 24 calls. If you sell, you can even reduce your cost basis, right? Let's say January 23, and let's say you have 100 calls or something for January 23, right? You can literally sell like 7 800 and make good money. If you sell like 800 calls, you make $2,000. So you're fine as long as GME doesn't go 800, and 800 is pretty high price. I mean, it can squeeze. I'm not saying it cannot go. I mean, we reached like 400, 500 bucks, but this is far price, right? So this is good money. You can actually like use this money to buy, if you are long, maybe buy more shares or whatever, right? You just got like $2,000. That will give you like 10, 12, something like that stock. So this is a great strategy if you have 100 shares or multiple hundreds or option leap. So yeah, check it out. If you have any question or comment, let me know. Other than that, don't forget to like and subscribe. Have a great day. Thank you. Bye.